Jason Bond from the Boole Microcap Fund. Here is our investment thesis for ADF Group, ticker DRX in Toronto and ADF-JF over the counter. ADF designs and engineers complex steel structures including airports, stadiums, office towers, manufacturing plants, warehouse facilities, and transportation infrastructure. Some of their sample projects include Miami International Airport, Lester B. Pearson International Airport in Toronto, Logan Airport pedestrian bridges, One World Trade Center, Goldman Sachs headquarters, M&T Bank Stadium, Ford Field, Daimler Chrysler Automotive Plant, PACCAR Assembly Plant expansion, and steel bridges and overpasses in Jamaica. Complex construction projects have higher pricing, and there's less competition for building them because few fabricators are equipped to do this work for these reasons. A more specialized labor force is needed. Strange angles mean more complex welding. Larger components require a larger fabrication base and more lifting capacity. Other special equipment is often needed. ADF has two facilities, a 635,000 square foot plant in Quebec and a 100,000 square foot plant in Montana. Roughly 90 to 95% of revenues have come from the United States and only 5 to 10% from Canada. One important note, although infrastructure spending can be cyclical, management believes that it has 3 to 5 years of revenue growth ahead of itself based on infrastructure spending needs across North America. Here are the metrics of cheapness. Enterprise value to EBITDA is 5.3, price to earnings ratio is 8.6, price to book is 2.2, price to cash flow 5.6, price to sales is 1.1. The market cap is $288.83 million, while enterprise value is $267.61 million. Cash is $56.3 million, while debt is $34.9 million. The Piotrowski F score is 8, which is very good. Insider ownership is 46%, which is outstanding. Return on equity is 30.7%, which is excellent. Here are the intrinsic value scenarios. Low case, if there's a bear market or a recession, the stock could decline 50%. This would be a buying opportunity. Mid case, the current PE is 8.6, but it should be at least 16. That means fair value for the stock is at least 1643, which is over 85% higher than today's 883. High case, assuming a 10x enterprise value to EBITDA for fiscal year 2025, the stock would be worth 2269, which is over 155% higher than today's 883. There are a couple of risks. A Republican victory in the U.S. presidential election would be a negative for infrastructure spending. However, ADF has not yet seen the benefit of the 2021 infrastructure bill, meaning that ADF's revenue growth is not reliant on new government spending over the next few years. A U.S. recession is quite possible, but ADF sees 3 to 5 years of revenue growth ahead.